There's been an avalanche of news in crypto this week, and some of it is absolutely game-changing. From GameStop's jaw-dropping Bitcoin buy to the SEC finally giving crypto staking some clarity, and even Trump stirring the pot with China and Jerome Powell again. This might be one of the most chaotic but bullish weeks that we have seen in a very long time. You need to know what's happening because these headlines aren't just noise. They are signals for what's coming next in the market. Welcome back to another episode of JRNY TV, your source for everything crypto, from major market movers to the narratives that actually matter. In today's roundup, we are diving into the top crypto news stories of the week and breaking down why they are so important. Whether you're stacking that good old ETH, hunting meme coins, or maybe you're just watching the chase unfold, this is one video you do not want to miss. Let's take some time and get into it. SEC says staking is not a security. This might be the biggest regulatory win for crypto in 2025 so far. The SEC just stated that staking on proof-of-stake networks does not qualify as a security. That means networks like Ethereum, Cardano, and Solana, along with everyone staking on them, can breathe a huge sigh of relief. This clears up years of regulatory uncertainty and could open the floodgates for both institutional and retail staking adoption. Why is this such a big deal? Because staking rewards were one of the major targets during the SEC's crackdown over the last couple of years. Projects like Kraken had to shut down staking services in the US, and there was growing fear that all staking would eventually be labeled as a security product. But now, with this clarification, we could see staking fully integrated into major exchanges and platforms again, and with better legal standing. This could also trigger a price surge in major proof-of-stake assets. Ethereum in particular could benefit massively, especially with institutions now much more confident in offering ETH staking products. Not to mention that this gives developers much more confidence in continuing to build DeFi products tied to yield and validator incentives without regulatory handcuffs. If you're an investor, this might be a good time to revisit your staking strategy. With less fear around regulation, staking ETH, ADA, or SOL just got a whole lot more attractive and potentially more profitable. Circle freezes $57 million of USDC because of ties to the Libra team. Yeah, just when things were starting to look stable, Circle dropped a bomb. On May 30th, Circle confirmed that it froze a staggering $57 million in USDC, targeting wallets that were allegedly connected to members of the former Libra project. Yeah, that Libra. Remember Facebook's failed crypto empire? Well, parts of that network have quietly resurfaced through various protocols, and now Circle's compliance team is moving fast to freeze those funds that are tied to ongoing investigations. This isn't just a random freeze. It's part of a coordinated effort involving blockchain forensic firms and possibly international regulators, according to sources close to the probe. The wallets that are in question reportedly showed unusual activity across several DeFi platforms, including obscure ETH bridges and DEX aggregators. Whether this was money laundering, leftover treasury ops from the Libra collapse, or maybe even something darker, nobody knows for sure. But the freeze has put serious pressure on Circle's decentralization claims. This move also raises some serious questions for USDC holders. How decentralized is your money if it can be frozen with one email? Circle says it's protecting the ecosystem, but critics argue that this is another sign of centralized choke points in the stablecoin sector. If stablecoins are going to serve as the financial rails of the future, users need trust. And right now, that trust is cracking. USDC's peg held steady, but the fear is back. Sharlink Gaming raises $1 billion to buy ETH, the first megacorp DeFi on-ramp. Okay, this is not a drill. Sharlink Gaming just filed for a $1 billion stock offering with one stated goal: buy Ethereum. That's right. A publicly traded gaming and gambling infrastructure company is selling its own equity to stack ETH. You heard that right. This isn't some small treasury play either. This is a straight up bet on Ethereum becoming the financial backbone of future gaming, gambling, and Web3 economies. In the filing dated May 30th, Sharlink said it believes that Ethereum will underpin the next wave of internet infrastructure. Translation: they're not just betting on ETH's price, they're betting on Ethereum as the platform their entire business model will be built on. Think smart contract gambling, on-chain betting odds, and tokenized gaming assets. They want to own the rails before everyone else wakes up to what's coming. This marks one of the most aggressive institutional ETH plays that we have ever seen. Not only is it bold, but it's incredibly smart positioning. While most corporations are still fumbling around with exploratory crypto partnerships, Sharlink is going all in, and the market is watching. ETH held above $3,800 in the aftermath, and analysts are saying a move like this could trigger a wave of follow-on interest from other Web3 adjacent firms. And it gets better. Sharlink says that this ETH won't just sit idle. They plan to utilize it for DeFi participation, staking, and onboarding users into crypto-native products. This could be the blueprint for what institutional ETH accumulation looks like in 2025. drive. Not ETFs, not grayscale, actual corporate usage. If successful, this could open the door to a whole new flavor of corporate adoption. GameStop YOLOs $500 million into Bitcoin, and Wall Street freaks out. GameStop just did something nobody expected. They took their meme stock energy and went full on maxi. On May 28th, the company dropped a shock announcement. It's putting $500 million with a B into Bitcoin, buying over 4,700 Bitcoin in one of the biggest corporate moves since Tesla in 2021 in one transaction. And just like that, the internet lit up. But Wall Street, not so impressed. The stock popped pre-market after the news broke, but by the end of the day, Game had dumped over 10%. Why? Because traditional investors, they still see Bitcoin as volatile, and they're not ready for a meme-fueled company to start aping into digital gold. But crypto Twitter, or crypto X, oh, they loved it. GameStop instantly became the newest cult hero for Bitcoiners. Proof that the next wave of adoption is coming from the unlikeliest places. This is also a major narrative shift. GameStop isn't just a relic of the 2021 short squeeze anymore. It's now an on-chain asset holder. The company framed the move as a long-term treasury strategy, betting that Bitcoin will outperform cash, bonds, and legacy assets over time. They also hinted at future integrations between Bitcoin and their digital ecosystem. So we're ready for it. Think Bitcoin, rewards for games, crypto native merch, and maybe even Lightning Network point of sale. We can hope, can't we? This could be the start of a domino effect. If GameStop can survive the stock volatility and ride out that FUD, other mid-cap companies may sure follow, especially ones that are trying to stay relevant with Gen Z and millennial audiences. It's bold, it's risky, and it's very on brand for GameStop. Trump accuses China of a trade deal breach. Tariff turmoil ensues. All right, let's kick it up a notch. Just weeks after a temporary truce, Trump has reignited trade tensions by accusing China of totally violating a recent agreement aimed at easing the escalating tariff war. Deal established on May 12th involved both nations reducing their tariffs. Trump's accusation centers on China's alleged failure to honor commitments, specifically regarding the export of rare earth minerals crucial for electronics as well as military equipment. U.S. Trade Representative Jamieson Greer highlighted China's continued restrictions on these exports despite the agreement terms. Complicating matters, a U.S. federal court recently ruled that many of Trump's imposed tariffs were in fact illegal, stating that he exceeded his authority under the International Emergency Economic Powers Act. However, a federal appeals court has temporarily reinstated these tariffs while the legal battle ensues. A combination of renewed accusations and legal uncertainties has unsettled global markets, with stock indices experiencing volatility amid concerns over the future of U.S. and China trade relations. Trump pressures Powell for rate cuts amid the economic uncertainty. All right, let's kick it up one more notch. In another significant development, Trump met with Federal Reserve Chair Jerome Powell on May 29th, urging the central bank to lower their interest rates. Trump argued that the current rates held steady between 4.25% and 4.5% since December of 2024, with putting the U.S. at a competitive disadvantage compared to countries like China and those in the European Union. The meeting, the first between the two since Trump's return to office, was marked by Trump's assertion that maintaining high interest rates is a mistake. He emphasized that with inflation dropping to 2.3% in April, nearing the Fed's 2% target, there is room for rate cuts to stimulate the economy, specifically the housing market. Powell, however, maintained the Federal Reserve's stance on data-driven decision-making. He reiterated that any changes to monetary policy would depend entirely on incoming economic information and would be made through careful, objective, and non-political analysis. The meeting highlighted ongoing tensions between the executive branch and the Federal Reserve regarding monetary policy. While Trump continues to advocate for lower rates to boost economic growth, the Fed remains cautious, especially amid uncertainties surrounding the administration's trade policies and their potential impact on inflation as well as employment. The week crypto got political fast. This week was a whirlwind. Regulatory wins, billion-dollar bets, and political power plays all collided. The SEC finally clarified that staking on proof-of-stake networks isn't a securities violation, giving Ethereum and other POS chains a massive boost. Meanwhile, Sharlink Gaming dropped $1 billion on ETH, and GameStop aped into Bitcoin with a $500 million buy. Two wild, high-conviction moves that signal a new wave of institutional conviction in crypto is here. But it wasn't all bullish. Trump reignited trade war tensions with China, accusing them of violating their latest deal, and pressured Jerome Powell to slash interest rates, all while fighting legal battles over blocked and unblocked tariffs. Then you add in Elon Musk stepping down from Doge while staying on as a meme coin advisor, and you've got yourself one of the most chaotic, high-stakes weeks that we have seen in a very long time. Markets are watching, and smart money is moving. The narratives are shifting fast. Regulation, adoption, politics, and memes are merging into a single volatile wave. If you're not plugged in, you're missing the next big rotation. If you are, this is where the opportunity lives. Like, subscribe, and comment below for what you think is the biggest story, because we are just getting started.